Hello everyone, welcome to our Egyptian online seminar group. First, keep your microphones off. Then if you have any questions, you can ask our speaker after his presentation. I have great pleasure of welcoming Professor Shyam Sunder. Dr. Shyam Sunder is a professor of accounting, economics, and finance at the Yale School of Management. He is a past president of American Accounting Association. He is one of the top accounting thought leaders in the world. His research contributions, including financial reporting, information in secret markets, statistical theory of valuations, and the design of electronic markets. He is a pioneer in the fields of experimental finance and experimental microeconomics. Dr. Sands has won many awards for his research that include 10 books and more than 220 articles in the leading journals of accounting, economics, and finance. Shyam Sunder is the 105th member of the Accounting Hall of Fame. Now we will start our seminar with Professor Shyam Sunder.
Thank you, Professor Alsag, and thank you, friends and colleagues, for taking the time to join us at this presentation. I hope we have a good conversation about financial reporting. And so please give me a few seconds so I'll bring up my PowerPoint presentation and so you can see it. Could you please tell me if you can see the PowerPoint presentation?
Yes, perfect.
Okay. Thank you, and we'll take about, maybe I'll speak for about 45 minutes or so, and then we should have plenty of time for discussion and questions and comments. That's actually the best part of the session, I think, most of the time. So we'll talk about the role of prescription and evolution in practice of financial reporting. As an overview, I hope you can see these slides clearly, Professor Alsag.
Yes,
Are
yes.
they visible? Okay. Just as an overview, in a couple of slides, I'll give you a picture of what I'm going to say. Since the passage of US federal securities laws in 1933-34, there's been a great deal of growth in written rules of accounting. The first set of written rules of accounting in 1936 were merely 6 paragraphs. And now the US Financial Reporting Standards, Financial Reporting Standards, FRS, have more than 10,000 pages. Something similar is also true of international standards, maybe 3,000 or 4,000 pages. So there has been a regulatory effort over this 80-year period, in US at least, to try to improve financial reporting. And what we do know at this time is that during this time, the financial reports have become increasingly detailed. It's not unusual to find some corporations have published financial reports which exceed 500 pages. So the question is, are we improving our financial reports? They say evidence. And is there evidence that there's less misreporting, either by error or intentional? Can we agree in academia or in practice on the 3 questions I have listed here? 2 questions rather. What is better financial reporting? what do we mean by better financial reporting? And two, how do we move in that direction of whatever we define to be better? Because without an agreement on these two, what is the answer to these questions? What is better and how do we move in that direction? It'll be very difficult to make any progress. So there are, of course, many perspectives on what is better. There's a descriptive perspective based on identifiable properties of accounting systems. There's a functional perspective based on the idea that accounting should serve a given function, and there are many different functions that have been proposed for accounting to serve. And then there's the procedural definitions which are based on a specific procedures, such as computerized accounting, continuously audited accounting, and so on. So there are alternative ways of trying to get there. We can get there through convention or tradition, through analysis of observations, evolution, deliberation, legislation, and there are others. We'll talk about them. And in answering these questions, there are always going to be conflicts because different people, different groups of people in society will have different interests, and making any collective choice in a world where everybody's interests are not identical brings up what you call politics. Politics is nothing but different interests, and which is not unique to financial reporting. So how do we deal with that problem? One alternative is that we shift our focus of attention from discussion and analysis of specific rules to discussion and analysis of the process and evolution of our institutions and norms. So academic thought and research and debate could be focused on what kind of institutions do we need and how do we create such institutions or evolve norms which will get us to the right kind of rules, instead of just talking about specific rules that IFRS or FASB has proposed, this rule or that rule. So we need to have extreme care in injecting radical new rules into the world to overrule accounting practice. The new rules for transaction innovations, people are always going to come up with new kind of transactions. And if you try to make new rules, they can innovate on transactions much faster than accounting bodies can write new rules. So it's a losing arms race for accounting rule makers. So the focus of last 80 years on written rules, especially in last 50 years since creation of FASB and now ISB, on written rules versus professional judgment, professional responsibility, practice, practicality, and public interest. I'd like to talk about those. And I would suggest that we need a balance between regulation and compliance on one hand, general acceptance and emergent norms, and third, market competition as a constraint on overly activist institutions that some have argued have come to exist in many parts of the world today. How do we develop such institutions? And I'm just going to suggest that we need more diversity of perspectives, and we need to have debate in the profession and in academia about how to create better institutions for accounting institutions. So that's basically the overview of what I'm going to talk about. A basic problem of financial reporting, may I suggest, is reflexivity. Reflexivity is the idea that transactions and how you represent transactions in financial reports influence each other. Okay, it's not a one-way street that you write a transaction and they will affect the financial reports, because how you report them are going to affect what kind of transactions are going to be are the business people going to engage in. So if we can see that as a game between preparers and regulators of financial reports, where the stable solutions are not easy to find. And even if you find a stable solutions, they may not have satisfactory properties. I'll take up a particular example of leases with which accounting and accountants and rule makers have struggled over the last 6 decades. So consider the problem of, since you are all people familiar with accounting, I'm not going to spend too much time, so I'll skip some of these next slides. 2-day car rental at the airport versus 25-year aircraft lease. Car rental is short-term, service is delivered and paid for, rent expense is deducted from income, and no entries made on the balance sheet. When an airline needs an aircraft, which might be used for 25 years, there are 2 possibilities for the airline. They could borrow the money from the bank and buy, and it'll show up on their balance sheet and depreciate it. Or they may not buy at all. They could just have the leasing subsidiary of the bank buy the airplane, give it to them on a lease for the same term, and they will make monthly lease payments for 25 years. It's typically non-cancelable, and effectively, for all practical purposes, there's no difference between these 2 transactions. But the way they were accounted for were quite different. And accounting rule makers have tried over these 6 decades to make sure that both these transactions, whether you borrow the money to buy the airplane or you lease the airplane, the form of the transaction should not affect how it's accounted for. And I won't go into the numerical example because you all know the lease accounting problems. But it's not a minor issue. Why is it a major issue? I have some numbers here. The Walgreen company, its operating leases are $25 billion. CVS, $20 billion. And percentage of total assets, 75% for Walgreen, 31% for CVS, and so on. And the off-balance sheet debt is very large amount. You can see that as percentages in the last but one column for these organizations. So how you account for leases makes a huge difference to what kind of balance sheet and income statements you see from these corporations. US government, the official debt is supposed to be about $20 trillion, but off-balance sheet debt is about $70 trillion. UBS, famous Swiss bank, in 2008 had an off-balance sheet obligations of about $60 billion. So the attempts to deal with this arbitrariness in financial reports has engaged the attention of accounting rule makers for a very long time. Let me just show you a summary of the results of that. In the United States, in 1949, Accounting Research Bulletin 38 asked that corporations must reveal long-term lease payments. Accounting Research Study 4 wrote down the details on that problem. Accounting Principles Board issued 4 different opinions, 5, 7, 27, and 31. Accounting series releases by SEC, there were 3 of them over the years. FASB standard was issued in standard 13 was issued in 76, which set up 4 bright line criteria for which leases are to be capitalized and which ones should be operating leases. Now, all these efforts, they had good intentions to make accounting more uniform, but they had very different consequences. Because there were 25 more rule-making efforts over 6 years, a total of 34 in 37 years. And let me show you very briefly a table. Here's a list of lease accounting rules issued by accounting rule makers starting from 1949 through, you can see that, and 82, 2016, I think there was one issued just a year or 2 ago, most recent one, okay? So why did they have to engage with this problem of writing better and better accounting rules all the time? Because there was transactions innovation taking place all the time. Why has it been so difficult for accounting rule makers to deal with this problem by making rules? Because they see rules as a replacement for judgment and professional and moral responsibility for contents of financial reports. So it's a little bit of a digression here, but I should mention that until about middle of the 20th century, the analysis of professions like doctors, lawyers, accountants, dentists, this was a subject matter for sociologists. And then around middle of the century, economists started taking interest in this. There was a famous article by Milton Friedman where he argued that, that doctors were making too much money and that these medical association or legal bar associations make it easy for members of their profession to collude and not compete. And as they started developing that argument over the years, basically the US law and the courts accepted that argument by 1970s, and on the basis of the economic analysis, and said you have to have more competition in the professions. And in accounting profession, for example, the Justice Department in US forced the American Institute of CPAs to change their code of ethics in February 79. And that led to a lot of new problems that I wouldn't get a chance to go into right now, but I'll be glad to answer any questions you may have. So let's go back to the question I mentioned at the outset, various perspectives on accounting. One is a descriptive perspective based on identifiable properties of accounting systems. Second is a functional perspective And third is procedural perspective. And there may be others. I'm sure you might come up with other ideas. And let me just briefly describe what I mean by this. So descriptive perspectives are double entry accounting or true and fair accounting, qualitative data, which has been talked about a lot these days, verifiability of accounting, reliability, historical or market-based accounting, which has been the darling of IFRS and FASB in recent decade. So a given accounting system may not meet all the descriptive perspectives simultaneously, but these are the kind of descriptive perspectives which have been under debate for over the past century. Then there are functional perspectives based on what purpose accounting serves. For example, you have heard about facilitating efficient operations of a factory, office, receivables, inventory, taxation, etc., helping maintain better markets. What is better markets? That remains ambiguous, though we can talk about what may be the meaning of better markets. Better management of public finances, that's been the argument made for government accounting. Better macroeconomic management, provisions of information to relevant economic agents for decision making. That is the official motto of FASB at least, and maybe IASB also, that purpose of accounting is to provide information for better decision making. But mind you, I'm just listing here various ways of defining, functionally defining what we may choose to think of as better accounting. And then third is a set of procedural perspectives, such as computerized, continuously audited, regulatory compliance, or traditional or ritual. And I'll come back to these in a few minutes. So what is better financial reporting? I'm sure you have seen the frequent calls, FASB or ISB will say, oh, we want high quality standards. But what is high quality standards? More pages or fewer pages or what? How can you measure the quality of a standard? And they never tell us what is the quality of a standard. And I have not been able to figure out how do you figure out what's the quality of a standard? Can quality of financial reports be assessed in some agreed upon fashion? Does the issuance of written standards or rules help us improve reporting? And are the answers to these questions yes? And I'm not sure if the answer is yes. Maybe you think the answer is yes, in which case we will have a good discussion about this. Let me suggest some alternatives. There are 6 approaches I can think of, maybe there are more, to meaning of what is better financial reporting. 3 of them are based on attributes of financial reports. Some people say pursuit of truth. Some people say qualitative attributes, such as we talked about reliability, verifiability, timeliness, and all that. Or measurable statistical or descriptive properties of the contents of the financial reports. That's been very popular. About more than 90% of financial accounting research published in our journals uses this one, measurement of statistical or descriptive properties of contents. There are 2 other definitions of better: serving some broad societal goals or serving goals of some specific individuals or groups. And third is a social practice. That accounting is just a social practice. It's a ritual. It's a tradition. There's nothing better. It's neutral. So accounting practices under this view are not rationalizable as a validated means to achieve some specific attribute or goals, and will, like a rain dance or wedding ceremonies or commencement or faculty meetings for that matter. Okay, so I don't need to spend more time on this given our time restrictions. So attribute-based approaches, true and fair is one example I mentioned. So such attribute-based approaches like true and fair tend to be aspirational criteria, like honor code in many universities or Declaration of Independence. They are high principles, but it's very difficult to implement them and debate about them, whether because they are not codified in specific rules or law. What is true and fair is a matter of judgment. Okay. Qualitative attributes I mentioned, it's in accounting textbooks, we often talk about faithful representation, timeliness, relevance, reliability, verifiability, and so on. All of these things may be desirable, but of course, when we do our accounting, we have to make trade-offs. And the list of qualitative attributes does not tell us how to make trade-offs. So they don't guide about how to make trade-offs. And there's ambiguity in meaning of many of these terms, such as uniformity, comparability, and conservatism. But I won't go into that in detail at this time. Producing data and disclosures with the desired attributes. One of the very popular methods in accounting research papers in recent decades has been the correlation between financial reports and stock market data. And some people call it value relevant reporting. But of course, there are serious problems with that. Some people say include consolidation of control entities, include separate business and geographical segments, include quarterly results. Those are the kinds of arguments made, or include non-financial data. The Jenkins committee reported, and a lot of people are writing papers about it these days. So the problem with this has been that there's an increasing risk of disclosure dump. That is, companies find it easier to dump a lot of information, 500-page annual report, and let people figure out what is where. And of course, most people don't have the time or patience to plow through all that. Serving societal goals and functions, creation of wealth and livelihood. In accounting research, we don't talk about it very much. Promotion of social cohesion and social justice, creation of markets for physical, financial, and human capital that promotes efficiency, creation of operations of organizations to create and distribute social surplus. But distribution of social surplus is hardly covered in our accounting debates these days. Coordination and disciplining of individual participation in organizations, and so on. And one of the more frequently mentioned meaning has been lowering the cost of capital. I have a lot of problem with that meaning of what is good accounting. If lowering the cost of capital is good accounting, that is what is cost to the borrower or the corporation is the rate of return to the lender or the investor. So anybody who argues for lowering the cost of capital as the goal of accounting should also agree that loading the rate of return on investment should be the goal of accounting. But I haven't found anybody who will agree with the latter interpretation. Another meaning is, we mentioned, was serving individual goals. But of course, individuals in society don't agree, and different people pull in different directions, in their own directions, which makes it very unclear what do we mean that by trying to find accounting which will serve individual goals or better decisions by who and for which purpose. That's the same thing, so I'll skip this slide. And there's always possibility that financial reporting is just a ritual. It has been continued as a tradition by convention with no documentable connection to any putative goals. It could be just a habit like rain dance. Nobody knows whether it has any result or not. You dance, and if the rain comes, you say it's because of the dance. If rain does not come, you just say it's maybe somebody did not put the right kind of dress or did not dance properly. Shaking hands is another kind of ritual. We do that in society. Birth, wedding, and death ceremonies. This is what do we do in order to get two people wedded to each other? That is entirely a matter of ritual. There's no rationalization about it. University commencement exercises, we go through a lot of time and effort, but what's the purpose? Is it rationalizable? Not that I can think of. And how about faculty meetings? So, have you seen anything get achieved in the faculty meetings? Okay, so is it possible that financial reporting also is simply a ritual? And this is something we do like many other things in our life. Hello? Okay. So let me summarize. What we've said so far is that better in financial reporting could mean many things: meeting some specified social or individual goals, or processing some general qualitative or specific statistical attributes and disclosures. It's difficult, even at conceptual level, to obtain agreement on what financial reports do and what can they do to meet the criteria within any one or all of these classes. So, given the nature of collective choice in social policy, it's rare that any attempt to clearly identify better financial reporting will yield results that all of us can agree on, or most people can agree on. So it's a big challenge. So such divergence in social policy is not unique to accounting. We can look at other aspects of economic life outside accounting, and analytical solutions to the collective choice problem is difficult. So an alternative way is to look at institutions and the processes, develop a socially acceptable process for defining and developing financial reporting. Say, let's not focus on the rules, let's focus on the process and the institutions. Will that get us anything better? So I'll point to three means of improvement. Remember, at the beginning, we had asked two questions: what is better accounting, and how could we get there? So now we are on the second question: how could we get there? So there are three possible approaches: design, emergence, or convention. design requires sufficient understanding of the structure of the problem, like solving a quadratic equation, and use the knowledge of our understanding to figure out what is the right solution to the problem is. In this case, what is the right rule which will solve that problem. But as you could tell from 43 attempts to try to solve the problem of lease accounting over more than 60 years, since 1949, we know it has not worked. Why has it not worked? Because we simply do not have an understanding of the structure of the problem. Because our knowledge is very imperfect, the effectiveness of successive attempts depends on the stability and continuity of the domain. So a second possibility is that the emergence from complex, poorly understood interactions through a random process gives rise to some solutions. That is, and that's what happens. That was the original meaning of generally accepted accounting principles. And we might consider accepting the actual practice as a convention. Okay. So over millions of years, human societies have developed and employed a variety of social choice mechanisms. And I have here down in the lower part a number of such social choice mechanisms. Common law, which is used in United States and UK and many other common law countries, though not in all parts of the world. Popular vote or referendum, legislation or statutory law, court judgments, administrative and regulatory agencies, self-regulation, and market competition. So these are examples of, I just listed 7 examples of social institutions which have been developed to try to address the problem of collective choice in society. And what do we do in accounting? In accounting, we have basically focused our attention on the 5th item, administrative and regulatory agency like FASB and SEC or IASB making the accounting rules. And we have not paid enough attention to the other 6 possibilities, okay, and their role that they could play. Where are we? Just a moment. I think I went back. Okay. Common law is like language. Language you speak, whether it's English or Arabic or Chinese or any other language, it's just a social norm. What shall we call this object? Shall we call it a table or maze or something else? It entirely is a matter of convention. And social norms play an important role in many aspects of our lives, including not just language, but also in law, in criminal law. Okay. And where does the meaning of words in a language arise? It emerges from the population. So that's the most diffused or the emergent processes. And Paciolo's book that we all know about, where he codified the prevailing accounting practices of Italian merchants at the time, that also was an emergent practice. He was just describing what the Italian merchants of his time, how they kept their accounts. So, and it sort of captured the common law of accounting at his time. In fact, as I mentioned, The generally accepted accounting principles also reflects the common law origins of accounting, because that's what accounting was. It was common law, generally accepted. But whatever is generally accepted became the recommended norm. So financial reporting largely left this common law until the number and size of publicly owned businesses, enterprises grew. And then with the creation of securities regulators, they started putting limits on the common law approach and started demanding that everybody must use this set of accounting rules or that set of accounting rules. So they left behind the common law approach. Popular vote or referendum is not going to work for. It's too technical a subject for general population to make a choice. The legislation and a statutory law has been used in some cases, but again, a parliament or legislature consisting of ordinary members of parliament simply do not have enough knowledge about accounting matters, and that they can make informed choices about this. When they do, they end up being very bad cases. We could cite many bad decisions made by Congress in US when they got involved in trying to write accounting rules. Courts is an interesting possibility. In fact, in 1958, the head of Arthur Andersen, Chairman Leonard Spacek, proposed that we should simply have a specialized court for accounting, financial reporting disputes. And the court will develop a case law, a body of case law that will serve as a guide to accountants and lawyers and others to decide how a particular transaction should be, they might consider reporting it. And so it'll still be a matter of judgment, as in all case law and common law cases, and not write the specific rules. The court will simply pass judgment on individual practices. We are familiar with the administrative and regulatory agency approach. That's what we are using. We have been using in the last 80 years in the US and last 30 years in most of the rest of the world. But it has its own limitations, because as you try to write down specific accounts, specific rules for accounting, it doesn't exactly solve that problem. And we can see many, many examples of the failure. I gave you examples of lease accounting, but there are any number of other examples that you can cite, but I think I should continue forward. Self-regulation, which allows a profession or industry to create or operate its own system to regulate or discipline its members. Most professions have such organizations, and they can do coordination standards. There are two kinds of standards: coordination standards and quality standards. Self-regulatory organizations are very good at making coordination standards, but they are not proved to be very good at writing quality standards. Okay, and we have some papers on that. You can see, look them up. In US, after securities laws in early years, the Committee on Accounting Procedures and Accounting Principles Board were kind of self-regulatory efforts. But with FASB, they came to have more force of implementation, and that became more like top-down regulation. And under this arrangement, there was always constant demands from the preparers asking FASB or now IASB to clarify this rule or that rule. And so the generally accepted accounting principles have grown into tens of thousands of pages, and they're not really generally accepted. They're generally imposed accounting principles. Markets, letting the markets decide to a certain degree, you can bring in the role of markets into accounting and regulation. But remember, market competition in case of public goods can also lead to very bad outcomes. So it's a much more complicated matter than I can handle right here in this short talk. So what is missing in these meanings of better financial reporting? It's been a very limited discussion. A broader discussion of better financial reporting should include stability, robustness to financial engineering. What do I mean by robustness to financial engineering? It's a famous Socrates paradox, Greek philosopher Socrates paradox, because when you start writing the rules, you have to write a cutoff point. And when you do a cutoff point, you're always going to run into this problem. When does a heap of sand stop being a heap? If you take a heap of sand and remove one grain of sand, what remains behind? Well, it's still a heap. Then you take another grain, then you take another grain. You keep taking out grains from the heap of sand. At what point it's not a heap anymore? At some point, you will say, well, it's not a heap of sand anymore. But it's very hard to specify when it's not a heap anymore. And that's a problem we run into in accounting. That's the Socrates paradox, which is a very ancient problem. We have not dealt with learning properties of the systems. We have not talked about the fit with the local business and the legal environment, which varies not only across countries, but also across industries or regions of a country. We have not talked about recognition of endogeneity of transactions and complexity. And we have not talked about active engagement of academics with the accounting issues and debates. So, in my opinion, the broader functions of accounting should include, of course, taxation and collection of taxes, national income, monetary policy, banking regulation, securities regulation. That one receives a lot of attention in our research. Employment, wages, retirement, labor unions, wealth generation, wealth distribution, government budgets and financial management, government accounting, including deficits and public pensions. I mean, there are so many cost benefits of legislative proposals. There's so many important issues for us in accounting to deal with, and say a better accounting should help all these aspects of our life. So balancing the regime for improving financial reporting has to look at regulation and written standards on one hand, while culture and social norms on the other hand. I think in accounting research, we are paying a lot of attention to regulation and standards, but not enough attention to culture and social norms. Specificity versus purposeful ambiguity, that analysis we need to do. Threshold versus continuous approaches to accounting. Authority versus competition. Privacy versus open transactions debate, like Sauter's events approach to accounting, where he basically proposed that we should enter all the transactions into a database and make database available to everybody and they can aggregate the database using their own methods. So you don't have to decide how to account for it. So in accounting practice and literature, there is a great deal of confidence in designed social systems. But as we have seen repeatedly, not only with lease accounting, but also with financial instruments and scores of other cases, we need to be more careful because we don't really know enough to be able to design rules that would improve our society, because our capacity to understand and design better rules is quite limited, in fact. So let me share some concluding thoughts. No standard is indispensable. People adjust and live without standards in many domains of life. Issuance of bad standards can do a lot of damage. How do we assess the performance of rule makers? Well, rule makers are always going to be biased towards action because that's how they show they are doing something for their pay. We do not judge legislatures by the number of enactments, so we shouldn't judge them, the rule makers, by the number of standards they write. The refusal to or delay to issue new standards is not a weakness. Let them take time, conduct field studies, make comparisons. But remember, comparisons will not be possible in a world where IFRS is used everywhere. Then you won't be able to make any comparisons because there's only one standard everywhere. Our ability to identify socially superior solutions is very limited and imperfect. We can't observe others' preferences. We don't know what other people want. So people, with the help of financial engineers, adjust their behavior to new situations, standards. Every time you write a rule, financial engineers will change the transactions. Understanding or observation of these changes takes a lot of time. And the aggressive standard setting that has been seen in the last 50 years, instead of being based on practice, is quite costly to our society and to businesses. So given the experience so far, some modesty with respect to our ability to devise new accounting methods that improve financial reporting is not out of place. Finally, I want to share a picture with you. What do we see here? On the left, there's grass in my lawn, and you can see the roots of the grass. You can look at the grass roots. That's one way of looking at ground, the detail. It tells us, I can see in the left photograph every blade of grass in the roots. Does it tell us everything we can learn? Does the detail and close examination give us the whole picture? Suppose we, instead of sitting on the lawn and looking closely at the blades of grass, we go back, go further away from the ground and look at this photograph of Earth taken from about 100,000 miles away by an Apollo space mission to moon. When you look at the Earth from that perspective, that far away, you don't see the blades of grass. You have lost that detailed perspective. But what comes into view is something else. You lost the detail, but you gained a very different perspective. Now we see that all 7.8 billion of us were born, living, and probably will die on this marble, in the blue marble. That perspective is a very different perspective on the same earth. So what I'm suggesting here is that getting more detail gives you one perspective. Getting away from the detail, as I have tried to do in this talk, gives you a very different perspective. Which one is a better perspective? I don't think either of them is a better perspective. We need both and a balance between those two. Thank you. Let me stop here and we'll take up the discussion. I'll
Thank
close.
you. Thank you very much, Professor Shyam, for this excellent presentation. Thank you very much for your contribution and your effort. Now, if anyone have any questions, you can use raise your hand functions or open your mic and ask your question. Yes. Abdul Rahman Ali, Banaz.
Yes, thank you very much. Thank you very much, Professor Shyam. That was really very insightful. We get used to that, accounting standards or accounting lectures to be very technical, talking about balance sheets and income statements and all of those technical, numbers. But your lecture was very impressive in putting into a real lively issues into the accounting. My question is quite into that area where you mentioned the social norms to be, invested within the accounting. How can the social norms and similar issues can be, included in the accounting? Do you think it can be as a form of disclosures in the financial statement, or are you referring to something else? Thank you so much.
Thank you. Can you hear me?
Yeah, very much.
Okay. Thank you for your question. You may or may not have heard of a very famous accountant, George O. May. And he wrote in, I think it was in 1940s, he was the chairman of Price Waterhouse at the time, was a very famous accounting person, very influential too. And his view, as was the view of many people at the time, was that accounting is a result of practice. And as I mentioned, originally the word generally accepted accounting principle was a matter of practice. What was the normal practice in the profession? In fact, American Institute of CPAs used to publish an annual survey called Accounting Trends and Techniques. I think they still publish that survey each year. And in that survey, you can read for various kinds of transactions, how do companies report the transactions? What are the alternative ways of reporting those transactions? Now, any given transaction doesn't really have only one right way of reporting it, because as is clear from the accounting trends and techniques, just as there's not one right way of speaking, there's not one right way, right language, there's not one right food, or there's not one right clothing, or not one right wedding ceremony. So we are living in a world, if we look around ourselves, of social norms every day. We have not yet started screaming at each other. Why haven't, you asked me that question in such a polite fashion. Why didn't you scream at me? Shyam, you're all wrong, completely wrong. Why are you talking this nonsense? You didn't say that. Why not? Well, you are abiding by certain social norms, and I'm abiding by certain social norms. So we live by social norms all the time. Why have we begin to ignore the social norms in the world of accounting? Can we not give as much role to social norms or increase role of social norm in accounting practice as we used to do until 100 years ago? And over this 100 years, the role of social norms, the role of generally accepted accounting principles has been gradually diminished and taken over by detailed thousands of pages of rules written by people at FASB and ISB, etc. We don't have to do that. I don't know if I answer your question, but please go ahead.
If anyone have any questions, you can open your mic and ask your question. Matthew? Yes?
Thank you, Shyam. That was always, it's a very thoughtful presentation. I appreciate it. Just kind of a high-level question. In a world which maybe should be moving from design and more towards norms, what's our role? What should researchers focus on, and what's helpful to know?
I think our role, a very good question. What is our role? By our, you, of course, I assume you mean accounting academics,
Yes.
right?
Yes.
Okay. So our role, we can take, we can see what lawyers do. Okay. In law, at least in US, maybe in many other countries, there are two major parts of law. There is statutory law, which is the written part of the law as passed by the legislature or parliament or Congress. And there is common law. Common law is the body of case law, which has been decided on over the history of courts. And what do the lawyers do, and what do the legal academics do? Legal academics, first I should mention, in the US, you know, but other people may not know, in US, when there's a crime, suppose I'm accused of theft. So I'll be, I'm arrested, or I'm charged with the theft, with the crime. And then the lawyers on both sides, the prosecutor and the defense, will present the evidence according to the statutes, according to the procedure. And then after the jury of lay people, not lawyers, the jury of ordinary people has heard the evidence, those 10 or 11 people will be asked by the judge, say, okay, you decide, is Shyam guilty beyond reasonable doubt of theft? On the basis of the evidence that you have heard, and on the basis of the defense that you have heard. That decision is not made by lawyers. That decision is not made by the judge. It's made by a panel of ordinary people who are not lawyers. Okay. Suppose the jury asked the judge, Your Honor, how much is reasonable doubt? 5%, 10%, 30%? What does the judge say to the jury? Judge says, no, I'm not going to tell you. You decide that according to your community norm, what is reasonable doubt in your mind about whether this accused person is guilty or not. That's how the criminal justice system works in America and in many other countries. Suppose the judge was an accountant. What would he say? He'll say 3% is reasonable doubt. What will be the result? 3% in the FASB rules was Enron was a consequence of their writing down that number 3%, correct? Because the moment you specify a particular threshold, that becomes the target for the crooks, right? So what we do as academics? As academics, we'll be analyzing the case law, we'll be analyzing the precedents, and will be suggesting in such and such situations, it will be better for our society to live in this fashion, to report in this fashion. These will be very detailed discussions and debates, just like there are detailed discussions and debates about what should be the penalty for somebody having illicit drugs. What should be the penalty for murder? Should we have capital punishment or not? What kind of society do we want? What will be the consequence of capital punishment? What will be the consequences of having very strong or very long jail sentences for possession of marijuana? You know, those are very detailed discussions that go on in the legal community from the point of view of society. That's exactly.
They're normative discussions as well.
Pardon me, exactly. And that's what we should be doing, because those will be the thoughtful discussions that will contribute to making our society, our economy, our corporations, better corporations, better economy. I don't know. Have I answered your question?
Very thoughtfully. Thank you.
Are there another question? Lord Sika?
First of all, hello, Shyam.
Hello. Oh, how are you?
It's been a while since we've talked.
Yes.
And both you and Greg Waymeyer owe me a beer.
Of course.
So,
no, we owe you more than a beer, okay? As soon as the COVID is open, I'll come down and, well, I think I owe a lot of, I mean, everybody owes a lot of things to everybody who lives in Georgia.
Mohammed, thanks so much for coordinating this excellent workshop and for inviting me. And I'm looking at my colleague Greg here, and I'm thinking, you know, we're all looking a lot older, Greg. There are so many younger people now in this field, so much brighter, more energetic than us. And you know, I'm looking forward to seeing what everybody's going to do. It's a very exciting and very oh, there's Siva, my colleague. It's an exciting and a troubling time in our country, and I know our students and our faculty are dealing with a lot. And I think what the opportunity we have is to take the culture-free, norm-free theory of the firm that has given us so much and has given us such a powerful paradigm, is to now start to stretch it a little bit. And that's what Shyam and I've heard Greg discuss this. The old paradigm is looking pretty old, and to continue to look at everything from the view of if it doesn't move stock price, then it has no value. And that's my first concern, is that we have, I won't mention, we still have some people coming out of the woodwork saying, we did another test on price change, and look, the market doesn't even use earnings announcements. So it's called a myth, and yet trading volume has increased by 6-fold in just the past 30 or 40 years. So what is going on with trading volume is you're now measuring individual choices. Individuals are deciding whether that earnings announcement has value to them, and they're trading on it. If trading volume is increasing by 6-fold, how can we then look at the average price and say that's evidence that earnings announcements have no value because we no longer see the significant price reactions. The other thing is increasingly, we have people judging social value-based accounting, again, based on the price reaction, and they're concluding that corporate social responsibility and sustainability reporting, again, has no value. And those two things, I think, are keeping our theory culture-free and norm-free. So I'll shut up and let Shyam comment on that. Again, thank you, Shyam, for encouraging me to think deeper about norms.
Thank you so much, Doug. You're absolutely right. I think there's what is the best way of putting it? I think there's a pseudoscience has taken over a good part of accounting research. Unlike the discussion we had a moment ago with Matthew about what academics could do to contribute to betterment of accounting and how it serves our society. The accounting research has been taken over by basically statistical exercises which have very little purpose other than credentialing of ourselves. So I can get one more item on my CV to get the rewards from the deans. Because this idea that somehow the correlation between some accounting data and stock price returns will help us get to better accounting systems. It is actually so bad, and I could talk for a few hours about that because the list of problems with that proposition is very long. And yet that has become what they call value relevance seems to have become the dominant theme in a lot of work these days. And I don't think it is, I won't go into the more details, but Doug, thank you so much for raising this issue. I have written about it, and you have written, and people have written, Greg and others have written about this. And I hope there'll be more discussion on that problem. Thank you.
You are very welcome, dear Prof. Dr. Stephen. My pleasure. Professor, the Lord Sika, Lord Sika.
Oh, me you're calling. Oh, sorry. Hi, Shyam. How are you doing?
Hello, Prem. How are you?
I'm okay. Thank you. Well, I think there are lots of things which you said which sound quite right and appropriate, but some don't quite chime. I was asked by the UK Parliament to help investigate a corporate collapse, which was Carillion. You may have heard of it. It was a big construction company.
Yes.
And one of his practices related to what we call reverse factoring. Now, I remember phoning about 10 or so leading accounting practitioners and academics, and I said, how do you deal with the reverse factoring? In every case, the question was, what is reverse factoring? Never mind how you deal with this. In other words, as you were referring to financial engineers, they were way, way ahead of everybody else. And in a sense, the practice they had adopted was, in a sense, establishing a norm. And everybody else coming afterwards, in a sense, had to negotiate that. And dislodging that king itself becomes highly problematical. And what happened at this company was essentially financial statements were flattered in every possible way. So that's sort of one illustration. Second is, I think your common law example is also highly problematical. I'm sure you said everything is problematical. Problematical in a sense that lots of antisocial practices may already be normalized. For example, in the conventional accounting, labor is considered to be a burden. That's why we call it a cost. And cost means that burdens must be reduced. We do exactly the same with tax. Tax is a cost and it's a burden. Hence, there's a huge tax avoidance industry. There are chapters in management accounting books on how to squeeze labor. But when you come payments to capital through dividend, my God, there is no chapter in any book to say how to reduce that, and conventional accounting doesn't even call it a cost. It's a reward. And the self-serving logic is that you must somehow maximize it. Now, the consequences of this are that accounting has become a motor for impoverishing people, because labor is a cost and you must squeeze it, and it is a motor of tax avoidance. Yet none of these issues can easily be resolved by saying, well, let's look at common law practice. Common law practice would be, for a long time, since the inception of capitalism, we've been impoverishing people. We don't really want to pay towards the social infrastructure. So in a sense, if you want to break away, if you like, from what is established, at some point you have to jettison these common law practices. Now, my sort of question would be for your thoughts on how do you then jettison it, given that the established common sense is that something is the right way of doing, even though upon reflection, it is actually very antisocial.
Okay.
Sorry, it's a long way. As you know, I always
I
ask
understand.
questions.
We can always rely on Prem to do his own fundamental thinking. We actually agree in most of what I have said. I don't think Prem is disagreeing either in a way, because what Prem is one of the few people I know in academia. What Matthew was asking about, what should academics do? Academics should try to think of how can accounting make our world a better place? You know, that's what academics' work is. Of course, we should teach accounting too, and think about how can it be better. Now, what I said, I'm not trying to be defensive here, but that we need to have multiple routes, multiple channels, okay? You need certain degree of regulation. You need certain degree of statutory decisions. You need certain amount of common law, what is coming from bottom up. But social norms and common law are not going to eliminate slavery from society. Social norms and common law are not going to remove a lot of bad things that have happened in our societies in the past and are happening today. Somebody has to, French Revolution could not have happened by common law. Somebody has to come forth and say, I'm willing to put my neck on the line because we need to make this change, okay? But just because somebody proposed that change doesn't mean that he or she is right. They have to risk their neck. And even then they could be wrong. We had a few people in Washington a few days ago. And they thought they were right, So you need a synthesis of these multiple approaches and allow room for many different approaches, okay? And I'm not presenting a formula that you get 10% of this and 50% of this and 20% of this in the recipe, okay? We don't know how it works. Okay. But we need to discuss that and debate that. As far as the question of distribution, remember I did mention distribution. This was not a talk about distribution of wealth in society, but I do have a paper which I'll be glad to send to you, Prem and others, for your comments, in which I propose a comprehensive system of accounting which measures the amount of total surplus being generated by each organization and the distribution of that surplus to various parts of society, various participants in the organization. Major groups of participants, which will include, of course, labor, it will include capital, it will include other factors of production, and the government and the community. Okay, that's the idea. So we can devise better ideas, better systems. Unfortunately, in many aspects of academic accounting, the word normative has become a dirty word. Okay, you mentioned the word normative, and half the people run away from you if they don't throw stones at you. And that is not the school, that's not the argument I'm making. I think as academics, we have to think better ways of doing things and debate them and discuss them. Even if Prem and I don't agree on something, we should be debating those issues, say this is better or that is better or why not. Thank you, Prem. You're always very interesting and thought-provoking questions.
Professor Samir Trabolsi from Canada.
Hi, Professor Sunder. Excellent presentation. I really enjoy it. Don't you think that we have a kind of wrong goals? We set up a kind of wrong goals to kind of curb managerial discretion over accounting numbers. And then went ahead with a lot of infrastructure, but we kind of missed the fundamental idea that financial reporting quality is a kind of relative concept, because you need the benchmark to see this accounting number are of quality compared to what. And this concept, we cannot address it only through a kind of transdisciplinary perspective,
Samir, I could not agree more with you. I mean, these single criterion decision-making and research on broader problems of society just don't take us anywhere. And that's exactly what is happening in a large part, not all of it, fortunately. I think Greg is here, he'll tell you a lot more about this, and other people. Prem is here. This single criterion decision-making, FASB has declared that here is the purpose of financial reporting. Financial reporting is better decisions for investors, and we're going to decide on that basis. Better decisions, what do you mean by better decision? What is a better decision? Is better decision buying at below the fundamental value or selling above the fundamental value? Is better decision insider trading? Better decision what? I mean, in social science terms or social welfare or welfare economics terms, that discussion that takes place in accounting literature is totally incomprehensible.
Yeah.
Okay. And we need to get over that, get beyond that. And I think through these conversations and attempts to go beyond that, maybe we will get over this. Yes. And I think somebody used the word paradigm. Yes, that's what we need to shift that paradigm. Thank you.
Terov Hopper. You have a question? Trevor Huber?
Yeah, I'm coming. Yeah.
Yeah.
Fairly straightforward question. One thing that you didn't cover was the future of the planet, and isn't a good starting point paradigmatically just to start by looking at whether accounting serves the United Nations Sustainable Development Goals.
Trevor, in a completely different conversation with some friends, I have been thinking and talking about this, even writing a little bit. I'll be glad to send you a short piece of my own.
Yes, please do.
Maybe I'll just summarize that in a few sentences. First, it's not clear to me that when it comes to about the future, are we looking to extend the life of the planet? Are we looking to extend the amount of time for which human species will survive on the planet? Are we looking to maximize the number of human beings who should live on the planet? Are we looking to increase the amount of resources that human beings consume per capita in our lives? So I mentioned three variables: consumption per capita, number of us living on Earth, human beings, and amount of time for which this number of people can live and consume before we expire. What is the purpose? Are we maximizing C, consumption per capita, maximizing N, number of us, maximizing T, the amount of time? Obviously, all these three variables are interrelated to each other. I have never figured out from environmental discourse what is the objective. I have read the UN goals. There are 17 of them, I think. They want more C, more N, and more T. Right? Is that a reasonable interpretation of that?
Oh, absolutely, yeah.
Okay. And I think it's nonsense. Okay. They have no idea of the reality, people who wrote that. Okay. We are 7.8 billion people going on to 9 or 10 billion. Every society, every country of the world is asking for more per capita consumption. And we don't want to limit the population. And we have finite non-renewable resources that we are consuming. What's the plan? What's the objective? What do we want? United Nations, those objectives, it just drives me up the wall when I read them.
Why?
Because
what's the alternative?
It's like we want more of everything. We want more. The word population does not appear in there.
No,
right?
I agree.
The word consumption does not appear there.
Well, it does in a sense.
There should be more consumption for everybody, right? Anyway, I know it's fundamentally an accounting question that you are asking me, and I'll send you that piece. It's a very short piece, and would love to engage with more conversation with you on that. Thank you.
Okay, thank you.
Gregory Weimer.
Yeah, Shyam, great job as always. Just a very brief question. What do you think are the things that can be done to breed humility among policymakers? So in other words, to have, what is it? What do we do about that?
Oh God. You save all the tough questions for me, Greg.
I'm sorry.
Okay.
What are you having for dinner tonight?
Okay. I think one of his plays, Shakespeare wrote, first of all, let's kill all the lawyers. No, I'm joking, but I think I did suggest many years ago that all rule-making bodies, especially FASB, should take a 3-year sabbatical every few years. And then come back and say, okay, are we still needed? You have some burning problems. And their budgets should be limited, their staffing should be limited. APB operated with a very small staff of part-timers. And they gave opinions, not standards. That was a far better model. They were more, humility was in the structure. You know, opinions is humility. Standards, you see the difference?
Oh, yes, yes.
Okay. In fact, before APB was research bulletins.
Yeah.
It was even more humble. And so it's a structure and the staff and the budgeting and the, you know, it's not the individuals. I don't blame the individuals who are there, you know. You create a structure and that assertiveness and the power is built into the institutional structure that
Right.
has caused all this damage to accounting and our society.
Yeah.
Follow up. How would you go about chronicling the damage?
How do I, now that is, let me think about this. Look at the financial crises that have taken place. Almost anybody who I respect reached the conclusion that mark-to-market accounting was one of the fundamental factors at the root of the 2008 financial crisis. Mm-hmm. And I think there have been estimates made of how much damage it did to the world economy. When we look at our own classrooms, how has the classroom discourse become relegated to memorization of rules instead of discussion of what could be the alternative ways of recording this transaction or event and what would be the consequences for various segments of society for this, you know. And it is that debate and discussion that used to take place in the classrooms has now been replaced by the codification of accounting rules. I think even if it doesn't damage what's happening outside our classrooms, I think it has damaged the brains and nature of accounting education to shift the focus of from thinking to memorization of rules. That's the damage, I would say. I'll have to think more about your questions are really provocative questions that I have to think more about. Thank you.
Thank you as always.
Professor Andre Meles from Italy. Professor Mudar Ablatif from Jordan. Professor Mudar. If anyone have any questions, you can open your mic and ask your question. Jordan, yes, you can ask.
No questions on my end, sorry.
Yes. I think that you have done very well with answering a lot of questions there, dear Professor Shyam. So thank you very much. So ended. So all that remains for me to say is thank you everyone that joined us, and I thank you very much for taking the time out to present to us today, dear Professor Shyam. It's been really appreciated.
Thank you to Professor El-Saich and for this wonderful idea of this worldwide conference, and thank everybody, all the participants, for taking the time and your comments and questions. Thank you.
Thank you very much, dear Professor, and I hope to see you soon in Egypt.
Yes, I hope so. I'll see you. Bye-bye.
Bye-bye.